Currency markets were shaken by trade tensions between China and the US. Bitcoin, the largest cryptocurrency, fell as much as 3.6% to $98,199. Not only Bitcoin, but other major crypto assets such as Ether and Solana also lost value. This created uncertainty on global markets and accelerated investors' risk aversion. China announced new tariffs on some products imported from the US, such as oil and liquefied natural gas. In addition, it responded harshly to Washington by imposing a 10% tax on all Chinese goods. China also announced that it would launch an investigation into tech giant Google LLC for antitrust violations. These steps had a negative impact on global financial markets as well as crypto markets. After the new taxes announced over the weekend, cryptocurrencies lost value rapidly with the uncertainty in the markets. This development reversed the short-lived recovery in the markets on Monday and caused investors to become nervous again. The impact of trade tensions on investors was not limited to price drops. U.S. investors' net outflows from 12 Bitcoin-focused exchange-traded funds, ETFs, totaled $235 million on Monday. In addition, open positions in Bitcoin futures contracts traded on Chicago-based derivatives exchange CME Group Inc. fell by 4%. This data indicates that institutional investors are taking a more cautious approach and tend to minimize their risks. President Donald Trump's open support for cryptocurrencies in the past had positive effects on the markets. However, the recent escalation of trade wars and regulatory uncertainties have caused the advantages arising from this support to disappear. Although cryptocurrencies initially gained positive momentum during Trump's presidency, global geopolitical headwinds and new regulations have eroded these gains. 2023 will be a challenging year for cryptocurrency markets. In addition to trade wars, stringent measures by regulatory bodies also make investors nervous. These developments have led to a reassessment of long-term strategies in crypto markets. As of 08:10 on Tuesday in London, Bitcoin was trading at $98,517. This level is about 10% below its record high. Technical analysts warn that staying below the psychological level of $100,000 could lead to further declines in the markets. In order for Bitcoin to recover, trade wars need to ease and markets need to stabilize. However, the current situation, especially the more cautious behavior of institutional investors and the high volatility in the markets, make this recovery difficult. The future roadmap for cryptocurrency markets will be shaped by macroeconomic developments and regulatory factors. To hedge against such high volatility, investors may turn to risk hedging strategies. In particular, stablecoins or safe haven assets can offer safer options during such periods. The performance of Bitcoin and other cryptocurrencies depends on the resolution of trade wars and the removal of regulatory uncertainty. Although short-term volatility in crypto markets may persist, a steady recovery should not be ruled out when long-term fundamental indicators are evaluated.